Hello, dosto. My name is Deepak, and with me is Sanjeev ji. And today we're going to talk to you guys about LLCs. I know you're thinking that, what else can they tell us about LLC? Because we know how to do an LLC. We know how to do business as an LLC. I bought my property under an LLC. I started my business under LLCs. And LLCs seems to be the starting point in many areas. But where it gets confusing is how do you file tax return for an LLC? And how do you take the money out of LLC? What are some of the implications that if you don't follow compliance, how that can get you in a lot of trouble? These are some of the areas that a lot of people miss out on, and then they end up paying a lot of penalties, and then sometimes they even come back to us and we have to fix it. They might have set up an LLC and then we have to go back and fix the entire structure altogether. Unfortunately, a lot of time people just take an advice on YouTube or Instagram or something like that, and they assume that that is the case. But trust me, there are so many different variables come into play when we decide which way we are going to set up your business. There's a reason for that. That's why we sit down and we try to understand what your plans are, what kind of business you're doing, where are you going to go in future, when are you going to sell the company, how are you going to sell the company, are you going to have investors in it, not in. There's just so many areas we have to look. We cannot decide based on just one thing. So anyhow, that's the topic for today. We're going to dig a little bit deeper into LLCs. I'm going to ask some very interesting questions to Sanjeev ji, and then if you guys have a question, then please leave it in the comment and I'll try to bring that up in our next video. Make it easy for you guys. Now, I want to remind you guys, we do have a webinar coming up on foreign income and asset reporting. That's going to happen next month in March. So if you would like to register for that one, just go to sanjeevcpa.com and register for that webinar there. So Sanjeev ji, LLCs, limited liability companies.
Yes, so it's a very important topic. The reason why we took this topic for today in our presentation is because when we get an LLC, when we get an IRS letter from the client, they always say it's a multi-member LLC, or they think it's a S corporation. But when they apply for that EIN number, either they apply as a single member or they apply as husband-wife. They think they are multi-member, but always that organization, that characterization always is wrong when we receive the letter from the IRS, when they show the letter to us, and because of that, they might be filing wrong returns. So a lot of times, if they file as a single member, on the IRS EIN letter it says sole member, but they're thinking they're multi-member. So a lot of times we have seen people file as a 1065, which is a partnership return, when they should be filing as a Schedule C, because LLC by definition has no meaning in terms of IRS literature. LLC by itself cannot be done, does not have anything. If it's a single member, it's a disregarded entity, need to report on Schedule C, which is sole proprietor business, profit and loss from business. If it's a multi-member, you have to file as a partnership, 1065. If it's a LLC, can also be converted, can be treated as C Corp or S Corp. Now, if it's treated as S Corp, you have to file the same form 1120S. If it's treated as C Corp, you file 1120. But there are reasons why you convert those from LLC to C Corp and S Corp, which we'll discuss that. But the main thing why we take this topic today is because of the confusion, how to file this return, whether we should go as single member, multi-member, what is our status. Like I said, there's no filing for an LLC by itself. Now, California, if you're in California, definitely the filings are different, totally different. Whether it's single member or multi-member, then you definitely have to file some return, 568 we call it. But for a treated being converted to S and C corporation, definitely we file their forms, like 100S and 100 form 100. So we have those things. So when we talk about LLC, we talk about what is there in their own IRS literature, or in their own, what is there in their account of IRS and FTB or Secretary of State. A lot of time people file with Secretary of State as a single member, but they're multi-member. So the form that they use for filing with the Secretary of State are totally different for being a manager or being a member managed. Now, LLC can also be a manager. It can be member managed. It can be manager managed. if your manager managed, then you need to file a payroll. You need to run a payroll for the manager. That's the requirement for the California EDD requirements. If it's a member managed, you don't have to run payroll. It's based on profit. But if it's based on profit, then you pay self-employment taxes. So there's a whole lot of planning in that area.
So Sanjeevji, well, by the way, I'm glad you talked quite a bit about California, but since we're talking about states, another problem is that people have LLCs in multiple states.
Yes.
And then they just assume that they only need to file taxes in their own state.
Yes.
Right. We see that quite a few times. They buy a property in a different state or short-term rental property or something like that. Sometimes they buy businesses in different states, and then they just assume that the only thing they have to worry about is their local state and federal taxes.
That's what they hear. That's what they see, right? That's the problem we have. For example, if you buy a property in Texas, they form LLC in California. It does not help you because now you're paying $800 for property which is not in California and which is in Texas. Or they buy a business in different state, let's say in Georgia. They form LLC in California, but the business is in Georgia. No protection from the state of Georgia. It's a foreign entity. You need to register as a foreign entity in Georgia. If it does not register, Georgia will not help you. Georgia state will not help you from any liability protection. So again, you're liable to pay California $800, and then you have to allocate income based on their income in two states. But what I'm trying to say, that's a very good point. In fact, I've seen people forming LLC in Delaware, Wyoming, but they forget to file the state in which the decision maker are living. So if you're a California resident and you're the decision maker, no matter wherever entity is formed, whether it's Delaware, whether it's Wyoming, anywhere you form an LLC, you still are a decision maker. If FTB requires you to do a foreign qualification in the state of California because you are the decision maker. It's not based on the percentage of ownership. It's based on decision making process. Who is the decision maker? So a lot of time people form wrong LLC in different states. For example, LLC, if you have property in let's say, again, I'll take a state of Georgia. If you have property in Georgia, you form LLC in Georgia. You file the California return, but you forget to file the LLC return for Georgia state. You file the federal, but you do not file the LLC return for Georgia. And Georgia will start sending you all the notices. You might be suspended. LLC will not be in the proper state because you do not file it. Or you're in California, you don't file the LLC return because you don't have any activity inside that LLC. And since you think there's no activity in LLC, you should not file a return. That's wrong. If you form any entity, you need to file a return requirement. Whether you make money, it doesn't make money. If it's LLC, if there is a requirement to file a return, there is a requirement to pay $800. First year is exempt in California, but after that you need to pay. If you don't file it, if you don't file the statement of information with Secretary of State in California, it will be suspended. Then you revive it, and there is a separate procedure for revival of entities of LLCs in California.
And Sanjeev, let's go back to payroll just for a second. So a lot of time people don't obviously, they don't know how to run a payroll. It's a lengthy process, and then you have withholdings. Then you need to file quarterly payroll reports, and taxes needs to be withheld. It's a whole procedure, right? So my question to you is, many of these people watching this, they probably don't even understand that they need to run payroll out of LLC, right? Is there like a minimum amount of money that LLC should make before they should worry about payroll?
So a very good question, by the way. So how to take money out from a LLC can be in the form of a salary, or it can be in the form of distributions. Now, like I said, if the LLC is manager managed, means there is a manager for managing that LLC. Other members are not managers. There's an active manager, person who is a manager, not designated as a manager. That manager needs to run payroll. For others, they can take profit distribution. If it's not manager managed, it's member managed, then you don't have to take a payroll because LLC does not require your payroll. Now, it also depends upon what nature, like entity that LLC is. Like I said, LLC by itself doesn't mean anything. LLC can be treated as partnership. Is a partnership, then definitely it will depend upon who is the manager. If you don't have any manager, you can take distribution as a profit distribution from that LLC. But remember, all the profit from the LLC will be subject to self-employment taxes, which is Social Security and Medicare tax, plus income taxes. If the LLC is designated as S corporation, then definitely you can take a distribution, but you have to run reasonable payroll, because now when we classify the LLC as a S corporation, from the IRS point of view, you need to follow the S corporation regulations. From the Secretary of State like in California, you follow the Secretary of State rules regarding the LLC, not as a S corporation. So from IRS point of view, it's S corporation. From FT point of view, it's S corporation, but not from Secretary of State point of view, because still have to file the LLC as articles. There are different form you have to file. So if your treated LLC is converted as S corp, then you have to run reasonable payroll, irrespective of whether manager or non-manager. If it's LLC is treated as a C corporation, you still have to run reasonable payroll, irrespective of whether you're manager or non-manager. Only when your LLC is treated as a general partner, if you're a manager, you need to run payroll for California tax purposes. But if you're not a manager, members can take it. Now, in addition to that, they can take out a guaranteed payment. So guaranteed payment is a kind of payment that a person takes out every month. It can be same amount, it can be different amount, but it's taken out every month. That cannot be designated as a distribution. If you treat it as a distribution, then in case of audit, the IRS will disallow that. They will treat it as a guaranteed payment. The reason why it's a guaranteed payment, because that person is running the business, that person needs money from the business for their own personal expenses, and they're taking a definite period of withdrawals over a period of time. So guaranteed payment is subject to self-employment taxes. Of course, it's not subject to state taxes, payroll taxes. That's where EDD comes into picture from California point of view. That's why they want you not to run guaranteed payment, not to do guaranteed payment, but to run payroll for that. So yes, so you can run payroll, but it depends upon what entity you are in.
Yeah, so I think some of you guys who already run a business, then I think for most of you, you understand the concept of payroll. It is all the other people who are into maybe real estate or some other business that doesn't really make a whole lot of money. You guys need to be extremely careful so you don't fall into a trap of having to run the payroll. So that's why it's so critical that you do a consultation and properly understand what you're trying to do, because when you just randomly open up LLC, randomly open up S corp, C corps, you can run into all kind of compliance issues. But anyhow, this is how you take the money out of your LLC. Anything else you want to talk about that, Sanjay?
Yes. So LLC, like you said, rightly said, it depends upon why you're forming the LLC for what. LLC should only be formed for something you're creating valuable asset like real estate. LLC should never be formed for operational business like real estate business, like retail businesses, like service businesses. Because you pay, if you're in California, you pay LLC fees on top of the gross revenue, plus you pay the LLC taxes, $800. And also you pay California taxes on your personal, of course, when it flows to this is passed to entity. So what type of business you're doing determines the nature of the entity, whether LLC is good or not. But start with LLC. And then if your business grows, your profit grows, then you can either convert to S corporation or you can convert to C corporation. Depends upon what type of, again, you need a consultation, you need to set up all those things, whether it makes sense to do or not. For real estate, always create LLC. LLC is only for protection purpose for real estate. It has the best protection in terms of charging order, which the third party can bring it. We always have a Wyoming LLC is very good, because that's keep all the matters confidential and strictly private. But again, you have to do foreign qualification and for real estate holdings. Again, like I said, it depends upon nature of what type of income what type of business you are in, and what type of income you are in. Now, and you can convert that LLC to that. If you make a lot of profit, then of course to avoid self-employment taxes, you can always designate LLC as a S corporation by filing certain forms, which is entity classification election, plus a letter to the IRS as to why it's so late in filing it, or can they retrospective from January 1st if you're doing in December. And most of the time they do it. So that's important area. So a consultation appointment is very important with your CPA, with your tax professional, so that you do the right things and don't just follow what your friends and family members are telling you, or whatever you heard on the videos or whatever you heard. Do the right things. LLC is the best form of entity to do, because it also offers flexibility. Like any partner, any member can be, it can be a corporation member, it can be foreign partner as a member. It can be H1B also can be a member of the LLC, provided they are limited partners. So there is two concepts, limited partner and general partners. So it provides the flexibility. You can allocate income the way you want. You can you can do special allocation for losses. So it provides that utmost flexibility, but has to be done in the right manner.
All right, guys. So that's what we wanted to talk about LLCs. But don't forget, if you want to understand how the foreign income and assets work and what kind of reporting you need to do, then you do need to register for the webinar that is happening in the month of March, or March 2025, just in case you happen to watch this later on in future. Please register for that webinar. It will be 2 hours long. We usually have a couple hundred people join that, and we will discuss all about foreign income and assets. So bring your questions, get them ready, and we'll get them all taken care of. Thank you, Sanjeevji, for joining me today, and I'll see you next time.
Thank you.